Good morning, you're watching Market Cafe on ET Now with me, Somit Sarkar, and my co-anchor, Ankita Saxena. So firstly, Ankita, what were the global cues that we are getting from the US market earlier?
Yes, absolutely, Somit. Let's look at how the US markets did. Now, the S&P 500 and the Nasdaq Composite rose on Friday, but it still posted a weekly loss, as recession fears continue to batter investor sentiments. Now, the S&P 500 rose 0.6%, while the Nasdaq Composite added 0.2%. The Dow Jones Industrial Average closed 176 points higher, or was up 0.5%. Now, all the major indices oscillated earlier in the session, after the core personal consumption expenditure price index, which is Federal Reserve's preferred gauge of inflation, came in slightly hotter than the economists were expecting on a year-on-year basis. The core PCE number climbed 4.7% in November on a year-on-year basis, while the economist poll by the Dow Jones expected a gain of 4.6%. So this, indicated that inflation is sticking despite Federal Reserve's effort to really tighten the rates and bring down the inflation. So that is really weighing in on the stock markets in the US. Now, the S&P 500 ended the week down 0.2%, posting a third straight week of decline. The Nasdaq Composite, meanwhile, lost 2% for the week. Also, the third week where it was down in a row. The Dow Jones was the only outperformer here that was posting a gain of 0.9%. So both Nasdaq and S&P 500 have seen 3 weeks of straight decline last week. So now moving on to how the European markets did. The European markets ended the week absolutely flat, as hopes of a Santa rally are now fading as we come to the year end. The Pan-European Stock 600 closed flat. The DAX was up 0.2%, while CAC ended the day 0.2% lower. Now, UK's FTSE finished trading at lunchtime because of Christmas holidays, closing almost flat, up about 0.05% in trade. So that was the global roundup of US and European markets. Now, Somit, do take us through how the crude is faring.
Brent crude rose around 4% in trade and is currently trading around the $84 per barrel mark. Now, this rise in crude prices was largely on the back of the fact that Russia said that they would look to cap their output. Now, this has been done, and this is an expected line, because earlier we spoke to Mr. Fisheraki, and he was also expecting a similar kind of cap coming in from the Russia side when it comes to output. Now, this is on the back of the G7 price cap that they had put on the Russian exports earlier. Now, Russia is saying that they could cut output by around 5 to 7% in early 2023, and this is largely, again, as I mentioned, on the back of the fact that G7 had put a price cap on Russian oil. Now, moving on to gas prices, if you see, the Asian gas prices declined from around $31 per MMBTU to and now trading around $28 mark, and this is largely in the back of a decline that we had seen in the European gas prices. Now, why did European gas prices decline? Now, this is because of a milder winter temperature and higher gas storage that they have in the region, and that's the reason why the European gas prices declined. And Asian gas prices have taken cues from this decline, and there was a sharp decline in the Asian gas price side also.
Right, thank you for that check, Somit. Now, let's quickly, before we begin the news flow, let's look at the events that you need to watch out for in today's session. First up is Central Bank of India will have its board meeting for fundraising through the issuance of Tier 2 bonds. We also have Dhanuka Agritech, where the buyback issue of worth 85 crores will open today, and we also have SpiceJet that is going to hold its annual general meeting. Now, in the IPO space, we have the lock-in period will open for pre-IPO investors for Supriya Life. So that's the action coming in from the IPO space. And in a couple of others events to watch out for, we have our President Draupadi Murmu will be visiting Hyderabad today. So that's an event that will be closely watched. And also Karnataka is likely to decide on the COVID guidelines going forward. So these are the events that you need to keep a track of in today's morning session.
Moving on to some global news, China will no longer publish the daily figures for COVID-19 cases and deaths. This marks an end to a practice that began in early 2020. Cities across China are struggling with surging virus cases. Now, cases surged after Beijing relaxed the COVID curbs.
And in another news, China took another step towards loosening its pandemic-related restrictions. Hong Kong's leader announced it would aim to reopen its borders with the maintained by mid-January. Hong Kong Chief Executive John Lee said authorities would aim to gradually, orderly and fully reopen the border.
Tesla suspended production at its Shanghai plant according to an internal notice. Now, they brought ahead a previous plan to pause most work at the plant in the last week of December. Now, workers at Tesla and its suppliers have also been falling sick amid the new COVID wave.
And an order by the Taliban banned women from working for non-governmental organizations. They claimed female NGO staffs had broken dress codes by not wearing the hijabs. 5 NGOs have suspended work in Afghanistan after the announcement.
Well, the prolonged winter storm in the US has killed at least 26 people. It brought heavy snow, high winds and brutal cold to most of the US. And the winter storm also left hundreds of thousands without power.
And Disney and James Cameron's Avatar, The Way of Water got an estimated $56 million during its second weekend in theaters. With this, Avatar nearly 900 million globally. Now, box office analysts note that cold winter weather during the Christmas weekend is likely led to slower ticket sales in the US.
With that, let's slip into a short break and we'll be back with more domestic news on the other side. Welcome back. You're watching Market Cafe on ET Now. Moving on to more COVID-related news. Now, random testing of international arriving passengers starts at Delhi Airport after the Health Ministry said that RT-PCR is now mandatory for passengers coming from 5 countries, and those are China, Japan, South Korea, Hong Kong and Thailand. He also said that the Air Suvidha form filling to declare the current health status will also be made compulsory for international passengers arriving from these 5 Asian countries. And the Health Minister has also released a 6-point guideline to states and union territories to combat any COVID-19 emergency in the country. Now, Samir Dixit, who has been following this news, joins it with more details over the phone line.
Cases of COVID cases are rising in many countries such as China, Japan, Brazil. So Indian government is on a high alert, and from starting today onwards, at Delhi Airport and other international airports, the COVID sampling test has started, especially the passengers coming in from these countries, Thailand, Japan, China. So their random test has been started, and it has been made ensure that if anyone has found so that symptoms are there, then a proper quarantine will be done. In addition to this, the states have been urged to enhance the liquid medical oxygen supply, and the states have also been asked to ensure that the supply chain of the medical oxygen should be maintained properly. There should be no shortage. Also, what we have seen during the second wave of COVID, there was a lack of medical infrastructure in many states. So the states have been asked to ramp up this medical infrastructure, especially the liquid medical oxygen, the life support system that has to be fully functional, and the backup should also be maintained. In addition to this, what we are also getting to know that the Delhi airport and the Mumbai airport, these 2 airports, the test has already started, and what they are saying that if any new COVID variant it is found, then that particular sample will be sent for further genome testing. So these sort of measures the government has already started taking place, and what government is saying at large that situation in India is as of now under control, but yes, with this surge in the COVID cases globally, they are ready to tackle any situation.
Right, and moving on, the Union Cabinet has approved the provision of free food grains under National Food Security Act for a period of 1 year. Now, Commerce Minister Piyush Goyal said that the centre would bear the entire cost, amounting to around rupees 2 lakh crores of the food subsidy. Prakash Priyadarshi joins in with more details over the phone line.
Yes, the Cabinet has taken three important decisions in its meeting yesterday. And the first one is, of course, you are asking about the regarding, Food Security Act. The Cabinet has decided to approve changes in National Food Security Act. As per the changes, Antyodaya Ann Yojana will be merged with National Food Security Scheme now. And approx 80 crore beneficiaries will continue to get benefit of these two schemes, and at two on free of cost. Yes, this is the biggest aspect of this decision, that the government will provide food grain to 80 crore beneficiaries completely free now. As you are aware, under these schemes, beneficiaries used to pay rupees 3 per kg for rice and rupees 2 per kg for wheat, but it will be completely free now. When it comes to PM Garib Kalyan Ann Yojana, the scheme which was started by government during COVID period, government finds now the situation is normal, and the additional 5 kg food grain need not require to be given to beneficiaries now. So technically, this scheme will not be in effect from 31st December 2022. But yes, benefit of this scheme will continue to be given to the beneficiaries. Government will have to make a provision of rupees 2 lakh crore under National Food Security Scheme. The second important decision, that is with regard to enhancement of MSP on copra, government has decided to increase MSP as per C2 formula, and that will definitely going to benefit farmers. And the third important decision that has been taken by Cabinet yesterday, that is with regard to defense forces. Cabinet has decided to extend benefit on one rank, one pension scheme to the defense personnel who got retired after July 2014. So more than 5 lakh additional defense personnel will get benefit under OROP. Back to you.
Well, thank you, Prakash, for those details. Now, days after we reported that the Torrent Group was leading the race to acquire Reliance Capital, sources are now indicating that Hinduja Group has revised its bid to become the front runner. Anurag Shah joins in with more details on the same.
Once again, there is a new twist in acquisition of Reliance Capital under the insolvency proceedings. As per sources to ET now Hinduja Group is leading the race to acquire Reliance Capital. Hinduja Group has increased their base, increased their bidding price to 10,000 crore to acquire the Reliance Capital. Remember, till Wednesday, the highest bid was offered by Torrent Group, that was of 8,600 crore. But now Hinduja Group has revised their bid to 10,000 crore. Hinduja Group will offer upfront cash of 9,000 crore, and Torrent Group has offered upfront cash of 4,000 crore. So now lenders will meet on 26th of December to decide on the bids, and lenders will take a final call selecting H1 bidder on the resolution plan. In November, during the first round of bidding, lenders got offer below the liquidation plan, up to the 60 to 70% below the liquidation plan. So after that, offer bids were revised. So in first round, Hinduja Group were leading, but in second and third round, Torrent Group was leading, and now once again Hinduja Group is leading with a new increased bid of 10,000 crore. So let's see on 26th what happened and what lenders will decide on the revised bid by Hinduja Group.
Right, and moving on, some fresh trouble for Chanda Kocher and her husband. The CBI got 3-day custody of the former ICICI Bank CEO Chanda Kocher and her husband Deepak Kocher. Now, the duo were arrested by CBI on Friday in connection to ICICI Bank Videocon loan fraud case. Now, remember, Kocher was accused of misusing her position to grant crores of loans to Videocon in 2012, which allegedly got transferred to a company allegedly co-owned by her husband Deepak Kocher. Post the allegations, Chanda Kocher had quit as CEO and Managing Director of ICICI Bank in 2018. Now we have Shweta Verma who's joining us now to tell us all that has happened with this case so far.
Former CEO and MD of ICICI Bank, Chanda Kocher, and her husband Deepak Kocher have been remanded to CBI custody till Monday. On 26th of December, they will be under the custodial interrogation, which will be done by CBI. This is important to note that nearly 3 hours of argument which took place before the court, and after this 3 days of remand has been given to the CBI. Also with this, it is important to see that the defense had argued that this is an illegal arrest, to which prosecution stated that there were 6 times where Chanda Kocher was seen sanctioning huge amount to the Videogon group, over to which the defense had to say that why the beneficiaries have not been arrested, why only the DO is getting arrested, over to which we have also seen defense arguing about the 64 crore, which was a massive amount, was a genuine transaction. So yes, after the conclusion of the hearing, which went on for 3 hours, it has been seen that 3 days custody has been given to CBI to further investigate into the matter of the fraud loan case, which was done by Chanda Kocher when she was the CEO of the ICICI Bank between 2009 to 2011.
Well, before going into the break, let's look at the big management lineups that we have for our trademark show TM. Now, firstly, we'll be having Ajay Srivastava, who will be giving us an outlook for 2023. Similarly, Hiren Ved of Alchemy Capital will also give us an outlook for the upcoming calendar year. Then we have the management of Medanta, will be giving us details about how to protect oneself from this COVID resurgence and on their business update. Then we have an exclusive from L&T Defense, and we'll get to know why L&T is betting big on defense when it comes to this sector. And lastly, we'll have a lineup of experts who will be giving us their top stocks to buy in calendar year 2023.
Welcome back. You're watching Market Cafe with me, Ankita Saxena and Somit Sarkar. Now, before we begin with the other news, let's quickly mark the Asia markets. The Asia markets seem pretty mixed. If you look at, remember in last week, Japan's core inflation had come out at its highest level in over 40 years. Now, the core consumer price in Japan rose 3.7% in November on an annualized basis, marking the fastest pace since December 1981, and the markets had fallen on Friday. But today, as we can see, the markets are pretty mixed. Nikkei is up, was actually started on a rather flattish note, was up 0.3%, is now has inched up a little, is up 105 points now. Kospi is down 0.3%. Shanghai is up 0.2%, and ASX 200 is up 0.6%. So a rather mixed signal, but a rather flattish start to the Asian markets, hinting towards a more muted start to our markets as well. That was the Asia check. Let's look at the SGS Nifty also, that's on your screen. It's just up 0.1%. So not much of a gain. It's rather flattish. So rather hinting towards a rather flattish start. That was the Asia check for you. Let's quickly move on to the other news that's made headlines.
Well, and for that we have Lisa with us in the studio, and she'll be giving us all those stocks that will remain in focus on the back of news.
Well, good morning. Starting with SJVN, they have one 100 megawatt wind power project at rupees 2.90 per unit, and the tentative cost of the development of this project is around 700 crore. They have won the project in an e-reverse auction conducted by the Solar Energy Corporation of India. Next is Deep Industries with a market cap of around 780 crore. They won 2 orders from ONGC worth rupees 178 crore. Suven Pharma, an announcement is expected today where Advent International is expected to sign a binding agreement to buy Suven Pharma. That will be for around rupees 6,300 crore. The open offer, if fully subscribed, the final deal size could cross rupees 8,100 crore. Restaurant brand Asia, Popeyes, it will launch Popeyes chicken restaurant chain from US, and it will enter Indonesia and aims to expand rapidly by opening 300 300 restaurants in the coming years. On the IPO front, Radiant Cash India IPO has seen a muted response and it just got 4% demand on the first day of its sale. The offer is expected to close on 27 December, while Supriya Life Science, the lock-in opens for pre-IPO investors and 48% of equity will come out of this lock-in. So these are the stocks that will be on the investors' radar for today. Back to you.
Right, Lisa, thank you so much for that. Do keep an eye out on all the stocks in today's trading session. Now, moving on, the main objective is to start bringing down the waiting period for SUVs, says Mahindra and Mahindra's Rajesh Jejurikar in a special interaction with ET Now. Now, the company has been definitely been a trailblazer this year, defying the overall trends in the sector. Here's a sneak peek into that conversation.
Firstly, the most exciting thing for us is the XUV400, which is our first electric passenger launch in a long time. That's going to start with test drives in January, and then we start deliveries across Feb and March. So that is exciting, and we've got a lot of very good positive feedback on that. We will announce the prices sometime in the middle, early middle of Jan.
I'm sure it'll be competitively priced, knowing you all.
Yeah, and it should turn out to be a good launch as well. So that's right now what's immediately on the anvil. We're doing a few interesting things on Thar, which we'll talk about in early Jan. We feel the opportunity to grow the category is there still. Of course, we've literally created this category because, when we launched this a couple of years back, nobody thought that anyone is going to buy a two-door. And we've really created the two-door category in India, and there's opportunity to do more. So we're going to do stuff with Thar as well. And of course we have all these launches which are so recent, so we've got to consolidate on them. A key priority for us now is to start bringing down the waiting period, and the time to say, okay, so much is the waiting period and feel good about it is, I don't think that doesn't make anyone feel good, neither us nor customers. So our priority now is to say, waiting period is down, we are able to deliver a lot and get the vehicles across to customers.
Well, defense has been a hot sector this year. With government's mega Atmanirbhar push, Indian defense companies have been manufacturing and servicing the orders that are lining up. Now, to discuss what's in store for the space going forward, Awan Dubash of ET Now caught up with L&T Defence's Jayant Patil at their Talegaon's Strategic Systems Complex. Here's a sneak peek into that conversation.
Today on Defenders, I'm at the Strategic Systems Complex in Talegaon, which is the state-of-the-art facility of L&T, which is home to the procurement and the manufacturing of the prototype defense equipment systems. In conversation with J.D. Patil as we deep dive into the defense business.
Let's say about 8-10% we can expect out of the defense alone.
By when?
And typically I expect about 2 to 3 years, and that should happen. Within this year we see the percentage starting to dramatically increase. When I say this year, there's always one rider with Ministry of Defense. The March can always become June, a quarter here or there in terms of our processes. Because it's a public money being spent, there's enormous amount of call it checks and balances as part of the system, and that's for good, because at least last many years we have not heard any scams in defense. And that's essentially where it takes time, but at the same time it's a market which truly rewards. And being a sunshine sector, virtually nothing less than 10,000 crores were coming private sector way.
So how do you see the order book growing from 14,000 in defense?
I see certainly at overall L&T level, you mentioned about Larsen & Toubro's order book in terms of very large volumes. Now that itself by itself will grow, because we typically go about 10 to between 10 and 15% year on year, and today our base being 3.75 lakh crore will increase. Now defense will outgrow that rate of growth. That's all is the current indication.
So 15 to 20%?
Probably even larger, but that's essentially where you may not get all of them year on year in a sustained basis.
Sure.
Defense always tends to be crests and hills, and that's essentially where some amount of I would say orders flow in a cluster, and some obviously will be years. Like typically a year before election. 6 months to 9 months after an election remains always a lull time. And normally it's your order book which sustains you through.
And moving on to Godrej Properties has entered into a joint venture with a wholly owned subsidiary of DB Realty to develop a property in Mumbai. Vamakshi joins in with more details about this venture. Over to you, Vamakshi.
Well, absolutely. Like you rightly said, Godrej Properties has entered into a JV with Nilkamal Realtors Tower Private Limited. Now, this in turn is a wholly owned subsidiary of DB Realty. They will be developing a property situated in Baikla, Mumbai. And in this deal, it is important to note that DB Realty will be transferring this property to the JV for an undisclosed amount. The Godrej Properties is expected to hold a 50% stake, while NRTPL is expected to hold a 49.99% stake. Now, let's not forget, earlier in Feb, Godrej Properties had announced an investment of nearly 700 crores, which included 400 crores in order to acquire a 10% stake in DB Realty and 300 crores into a JV with DB Realty that would be focused on slum rehabilitation as well as Mahindra redevelopment projects. And thereafter, we saw that stock tank and decline nearly 15% in 2 days. And that came in after analysts and investors had come down heavily on the management of Godrej Properties. They had questioned the rationale of making an entity-level investment in DB Realty, whose promoters were accused in the 2G telecom spectrum scam. And thereafter, we saw that Godrej pulled out of the deal with DB Realty, but nevertheless, it did maintain that it would continue to explore the possibility of evaluating projects with DB Realty on a case-to-case basis. And that has indeed transpired, with the company entering into a JV with its wholly owned subsidiary of DB Realty. And so that was news flow surrounding Godrej Properties, and that is why the stock is in focus today.
Vamakshi, but please don't go anywhere. Stay with us because you have all the brokerage notes that came in this morning for the trade setup. Do take us through that.
Well, absolutely. Let's first start off with ITC. We have a note coming in from Antique, and they believe that ITC is well placed to record a strong performance in the third quarter, and that will be mainly driven by a strong double-digit growth in their cigarette volume. They're also seeing robust recovery in the hotels business, wherein they're expected to report the best ever quarter. So on the back of all these factors, Antique has maintained a buy rating on ITC, given a target price of 419 per share. The next stock on our radar is Canfin Homes. We have a note coming from Motilal Oswal, and they believe that Canfin's business model and its superior reliability franchise is its biggest moat. Stringent cost control measures may aid in lower operating ratios, and re-rating is still contingent on Canfin Homes' ability to identify a successor. So on the back of that, they maintain a buy rating on this counter, given a target price of 630 per share. CESC is the next stock on our radar. We have a note coming in from IIFL, and they say that they've been seeing consistent delays in tariff hike in Kolkata. They're also witnessing some weakness in two large franchising circles. On the back of that, they've actually gone ahead and cut the FY24 and FY23 PAT estimates by nearly 12%. Nevertheless, they believe that valuations remain cheap for this counter, which is why they maintain a buy rating but cut their target price from 110 to 95 per share. And lastly, we will be focusing on textiles. We have a note coming in from MK, and they believe that the ban on the Xinjiang cotton has increased reliance on Indian spinners. Home textile players also are capturing strong market share in geographies like USA, and they stand to gain when any FTA comes into force. Given recent PLIs, garmenting would also get a significant boost in coming times. So on the back of that, they've actually gone ahead and initiated coverage on 3 textile stocks, namely Vardhaman Textiles, Gokuldas Exports and Nitin Spinners, and they see an upside potential of 50% plus in all these counters.
Well, thank you, Amakshi, for giving us all those details related to brokerage notes. Moving on, now metals have failed to shine in 2022 as soaring inflation, recession woes capped gains for the index. Now, Ashesha joins in with and breaks down the details of what made this a difficult year for metals.
After jumping over 70% to give the best returns in over a decade in calendar year 2021, Nifty Metal Index has been the 4th best performing index in 2022 after Nifty Bank, Nifty PSU Bank and Nifty FMCG. Nifty Metal outperformed the benchmark index to end the year with a 13% uptick. But it has clearly been a tale of two halves. Nifty Metal underperformed Nifty 50 in the first half of the year but rose by nearly 40% in the second half. Let's have a look at what really transpired in the metal space in the year gone by. Higher than expected inflation, monetary tightening by central banks globally, slowdown in the Chinese economy, and fear of recession led to a turbulent year for commodity prices globally. Rising geopolitical tensions led to an exponential surge in commodity prices in the month of February and March. Aluminium prices on London Metal Exchange rose by nearly 38% from the start of the year before peaking out in March. Similarly, zinc and copper prices also rose by 28 and 11% respectively during the corresponding period. However, not everything was as glittery all through the year. Just when we thought everything was going fine, ferrous industry back home had to face a setback. Government in the month of May imposed export duty on iron ore, steel and stainless steel to tame inflation. This led to a sharp decline in volumes for steel companies in Q1. Volumes for steel companies, for steel majors Tata Steel and JSW Steel dropped by nearly 21% in the first quarter on a sequential basis. In fact, some smaller companies, the likes of KIOCL, were forced to shut down their operations altogether due to financial unviability. On the 18th of November, government reinstated export duty to pre-May 2022 levels, but this offered little respite to steel players as steel export prices had now fallen below domestic prices. Stainless steel player Jindal Stainless, however, benefited due to increased export opportunity. Let's have a look at other news that made headlines during the year within the metal space. Tata Steel surpassed Tata Group's crown jewel TCS in terms of profitability in FY22. Much like its other business verticals, Tata Group decided to merge all of its metal companies under one basket. Interestingly, London Metal Exchange had to suspend nickel trading after nickel prices rose by a whopping 250% in just a matter of 2 trading days. NMDC demerged its iron and steel business, while Hindustan Zinc divestment also progressed well. But as we head into 2023, outlook on Indian steel demand growth looks quite promising. World Steel Association estimates steel demand in India to grow by about 6.7% in 2023 compared to a mere 1% demand growth worldwide. China traditionally has and continues to have a great bearing on global commodity prices. Resurgence of COVID-19 has again resurfaced as a cause of concern. A probable recession and its impact on global demand will determine how 2023 could shape up for the metal sector. But the big question now is whether the commodity upcycle which began in 2021 over, or was 2022 just a blip in what could be a multi-year commodity upcycle? This, of course, is anyone's guess.
Well, that was a detailed roundup of the year gone by for the metal sector. Moving on, NCC's management meet is in focus today. They are going to give key updates about the Vizag land sale and the risk management system. Let's go across to my colleague Sharad for more details on this. Over to you, Sharad.
Well, yes, the focus is on NCC as per the analyst meet note with Centrum Broking. 2 important things coming from the promoters table. The first one, of course, being that the family is closely involved in the business. However, the stake they have in the company is low, but they have infused almost 350 crore rupees of equity as well. Now, of course, they're putting out their risk management framework and they're targeting a 15% growth, and this is coming in using their internal resources. Now, 2 important things coming. The first one coming is for Vizag land sale. The entire land sale is on track. However, there is a 3-month delay happening, and once this is completed, then we can expect a sizable growth capital being infused into the company. The second important thing coming in is the SEMAB arbitration proceedings, and this is likely to be completed by February next year. Now, the standalone order book roughly stands at almost 37,500 crore rupees, and if you look at the FY23 guidance which has been given to ET now by the management, they have stated that the revenue growth is expected to come in at 30% on a year-on-year basis, margins expected to come in between 9.5% to 10%, and an order inflow for the second half of FY23 expected to come in at 16,000 crore rupees. Now, lastly, I would like to just point out what the analysts are stating in the Bloomberg data, and out of 15 analysts tracking the stock, 100% of them have a buy rating. The 12-month target price set at 99 rupees, indicating a return potential of 27%.
Well, thank you, Sharad, for giving us all those details and highlights coming in from the NCC's management meet. Moving on now, while inflation could be easing out, there are still several uncertainties that investors must remain watchful of. Jim O'Neill adds that the commodity prices also could rebound if China reopens completely. Let's listen into it.
There are some things, particularly aspects of the inflation issue, that I think the evidence is starting to become more positive. But against that, there are so many huge unknowns, including things that could make inflation worse again. And actually, the last thing to mention on, maybe we get into it more, on the day we're having this discussion, the Bank of Japan has just announced a quite potentially important change in its monetary policy stance. You know, if the BOJ is going to start exiting QE, then there's going to be a whole new set of negative consequences for world bond markets, which could have a knock-on effect to equity markets, which both could then have a knock-on effect to economic events too. So there is definitely lots of issues out there. One has to think about how we navigate carefully.
So Jim, one side markets are happy and breathing a sigh of relief that worst of the inflation is behind us. But it's also the transition where you get worried that have central bankers really, in their entire effort to bring inflation down, have they stormed the growth? And could it be the R word, recession, which would be the dominating fear for 2023?
I mean, I think it is now as we turn the year. I can't really recall a period in my 40 years of looking at world economics and finance where I can remember so many people are confidently forecasting recessions across the Western world. The only debate being how severe. And that is quite interesting because if inflation turns out to be improving a lot faster, as one very famous US hedge fund manager said to me many, many years ago, the only thing you know about central banks is when the evidence changes, they'll change the view. And in this past week, as you know, the Fed has talked in the US again, very tough about how long it'll keep rates higher for. And that's the message they want to send us now. But if it looks like inflation starts to improve a lot more, and if the economy weakens more, the Fed will change the view. So we'll wait and see, and it's going to be extremely interesting to watch.
Well, a domestic broking firm, Nirmal Bang, did their auto retail channel check, and what we are understanding from that is that discounts have made specifically a comeback when it comes to passenger vehicle, and on that we have Tata Motors and Maruti Suzuki that remains in focus. Firstly, on Maruti Suzuki, the brokerage is saying that they are offering discounts of up to 75,000 on models like Espresso and Celerio. Now, except for Brezza and Ertiga, all the other models of Maruti Suzuki have some schemes or discounts that have been provided. Now, when it comes to Tata Motors, the brokerage firm is saying that the discount scheme is available on all of its models, and dealers have saying that there has been a slowdown when it comes to specifically Harrier and Safari. Now, this can be also caused by the fact that the discounts offered on these two models are up to 1 lakh rupees. Now, this has increased from 75,000 offered in the previous month. Now, this increase in discounts and slower demand could be on the back of competition coming in from the SUV segment, like there has been Mahindra's XUV 700, Toyota Innova Hi-Cross, Mahindra Scorpio N, and this could be the reason what has led to a lower demand when it comes to Harrier and Safari. Also, when it comes to electric vehicles, Tata Motors is continuing to see a strong inquiries. In fact, Tata Tiago's EV has received a very demand, and around 25 to 30% of the bookings have come in from the first-time buyers.
Well, that was the note coming in on the auto sector. With that, we're completely out of time on this show, but you don't go anywhere. There's lots more action coming up on the market. Thank you so much for tuning in.